Trading this morning was lively. Have you seen the news? Some days the market doesn't just move, it invites you to lean closer. Doors seem to shift in the frame, new corridors appear, and our first instinct is to sprint toward the nearest headline. Before we do, let's breathe. Notice the tug to chase, the urge to doubt, and that quieter voice that asks for structure. Stick around for the bold BTC and top alts read at the end, plus what I'm watching this week to keep trades clean and nerves steady. Educational only, not financial advice. Here's what shifted and why it matters. A Layer 1 team is building a deliberate bridge into traditional markets. A reconstruction plan is exploring tokenization to make capital behave with more accountability, and a major founder is voicing an audacious path for ETH as institutional rails thicken. Different headlines, same undercurrent. New pipes, new rules, new ways money moves. When pipes change, price learns new habits. That's opportunity, if you trade the level, not the headline. First, the bridge. Sonic Labs received approval to expand into U.S. capital markets with up to $200 million in tokens set aside for a structured push. Think a U.S. entity, the kind of private investment vehicle public markets understand, and an exchange-traded product tied to their token with reputable custody. As reported today, they're also reworking token mechanics to reduce net inflation by directing more fees to burn, aiming for a supply that breathes in, then out, instead of constantly diluting. Why traders care is simple. Bridges shape liquidity. If the filings, the issuer, and the custodian all materialize, you won't just see a headline. You'll feel it in tighter spreads, thicker books, and more consistent follow-through around announcements. The survival frame here is calm and practical. Define the level that proves the bridge is real, perhaps where price is reclaimed on rising participation. If depth improves as the confirmations arrive, consider leaning in with modest size and tight invalidation under that line. If noise spikes without depth, let it pass. A bridge should carry weight. Now to a quieter headline with heavier gravity. Reporting today outlines a post-war plan that explores tokenizing the financial plumbing needed to rebuild. Capital raised into transparent instruments, milestone-based disbursements coded into contracts, data feeds and audits that make promises verifiable before funds move. Why it matters to investors and day traders isn't to spark a ticker chase, it's to signal where real-world assets are likely to touch the chain in ways that endure. If banks, multilaterals, established NGOs, and reputable oracles converge on these rails, you get new demand that isn't purely speculative. That can change how weekends trade, where liquidity clusters, and which venues get favored. The survival frame is to track substance instead of slogans. Ask, are counterparties named and credible? Are milestones enforceable? And do you see third-party verification on-chain? If yes, the rails, not the story, become the anchor for your bias. If not, keep your powder dry. And then there's the big whisper, an audacious projection that ETH could expand in value by orders of magnitude as Wall Street builds comfort and uses it as a settlement and programmable money layer. As noted today, the claim hooks attention because it sketches a future we can almost touch. The work is not to argue with the number, but to translate it into a checklist you can trade. If exchange-traded products keep opening doors, if real-world assets settle here, if block space demand is visible in fees and L2 throughput, then the floor may thicken over time, but your entries still live where proof lives. Reclaim a level with participation and hold it on retests. Avoid first impulses that collapse without volume. Let structure, not hope, invite you in. Let's thread these together. The bridge into public markets, the on-chain blueprint for reconstruction, and the institutional path for ETH all rhyme. They point to the same arc. Pipes are being laid, and value accrues where pipes are used. For traders, this changes the rhythm. U.S. open and close windows matter more when regulated products drive flow. Weekends thin out when institutional pipes rest. News that names verifiable partners matters more than slogans that trend for an hour. Our edge is to read the room, then trade the level. Now this is what I'm watching this week. For the bridge story, I want to see filings I can read, the issuer's name made public, custody arrangements live, and any token burn changes observable on-chain. The moment depth thickens as confirmations land, I'll consider a position defined against the reclaimed area. If the book remains hollow, I'll let the candle flash by without me. For tokenization, I'm looking for milestone logic that actually gates funds and oracles with reputations to lose. When verifiable rails appear, the assets and venues plugged into them will be the ones I prefer to trade. For ETH, my focus is on reclaim setups that coincide with rising participation and healthier fee burn across L2s. If a level is lost on volume and retested from below without strength, I'll stand aside and wait for another invite. Patience is cheaper than pride. If you've noticed your pulse quicken during headlines like these, you're normal. That's why we keep a few habits close. I act only after a second source or a tangible confirmation appears. I size by realized volatility so my dollar risk stays constant, even when ranges expand. I use time stops to flatten positions that refuse to reveal momentum. And I pick liquidity over lore, because tight spreads fill orders, stories don't. You don't need to be first to be effective. You need to be intact. Here's the bold, grounded read you stayed for. If the week brings real follow-through, names and numbers that make the sonic bridge tangible, credible mechanics for tokenized reconstruction, and visible load on ETH's rails, then reclaim signals on ETH and the highest quality L2s become my focus, with BTC acting as the steady hand that makes the floor predictable. In that scenario, mid-caps with genuine fee capture and partner news can catch a bid, but I will require real depth and clean levels before I size. If confirmations stall and majors slip below value areas on volume, I expect mean reversion to dominate. Great for disciplined scalps, painful for FOMO. In both cases, the plan is the same. Define invalidation before entry, keep position size proportional to the current range, and let the market prove your idea quickly or dismiss it without ceremony. Wait till you hear what's coming next. If the rails keep forming, we'll see price behavior change before the press release is celebrated. That's our moment, when the room seems to breathe and a door you've marked quietly unlocks. When it happens, you won't need me to tell you. The tape will. If this helped you turn noise into a plan, do your future self a favor and like this video so you can find it again when the feed gets loud. In the comments, name the exact level you're watching on ETH or your favorite L2 this week. Putting it in words anchors your discipline. And subscribe for more survival first updates. We'll keep reading the room together, then trading the level.